When filing your taxes, it's important to know what income the IRS considers taxable and what can be excluded as non-taxable. Misreporting income can lead to audits, penalties, or missed deductions. This guide explains what types of income must be reported and what income is tax-free to help you file your tax return correctly. Taxable income includes any money, property, or services you receive that increases your financial resources. The IRS requires you to report and pay taxes on this income. Common types include 1. Earned income, wages, and self-employment income. Alright, let's talk about some examples of earned income. This includes salaries, wages, and tips. It also covers self-employment or freelance income. Don't forget bonuses, commissions, and overtime pay. And of course, income from side hustles or the gig economy. Next, we have investment and passive income. These are also taxable and can come from different sources. For investment and passive income, you have interest from savings accounts, bonds, and CDs. Then, there are dividends from stocks and mutual funds. Lastly, capital gains from selling stocks or real estate also fall under this category. 3. Retirement income. Traditional IRA and 401k withdrawals, pension payments. Social Security benefits if your total income exceeds certain limits. 4. Other taxable income. Unemployment benefits, rental income from properties, debt forgiveness, canceled debt may be taxable. Prizes, lottery winnings, and gambling income. All taxable income must be reported on your tax return using Form 1040. What is non-taxable income? Some types of income are excluded from federal taxes, meaning you don't need to report them on your tax return. These include 1. Gifts and inheritances. Money or property received as a gift up to IRS limits. Inheritance from a deceased relative, though estate taxes may apply. 2. Insurance and compensation payments. Life insurance payouts received as a beneficiary. Workers' compensation benefits for workplace injuries. Disability benefits if premiums were paid with after-tax dollars. 3. Certain government benefits. Welfare benefits, TANF, SNAP, housing assistance, child support payments. Veterans' disability benefits. 4. Some educational benefits. Scholarships and grants used for tuition and required expenses, tuition reductions from educational institutions. 5. Other non-taxable income, certain lawsuit settlements if for physical injury or illness, rebates or refunds from manufacturers or retailers. Municipal bond interest, tax exempt at the federal level. Even though non-taxable income doesn't need to be reported, it's still a good idea to keep records in case of an IRS audit. Understanding partial taxation. Some types of income are partially taxable depending on your financial situation. Social Security benefits, only taxable if your total income exceeds IRS thresholds. Scholarships and grants, taxable if used for room, board, or non-education expenses. Disability benefits may be taxable if your employer paid the premiums. Final tips for reporting income. Track all income sources, whether taxable or not. Keeping detailed records helps with accurate reporting. Check IRS rules for changes. Income tax laws may change annually. Consult a tax professional if unsure. Seek expert advice to avoid mistakes. Need tax help? Contact SK Tax Associates. Understanding taxable versus non-taxable income can be tricky. SK Tax Associates can help you file your return accurately and maximize your tax benefits. Contact us today.